Good morning, good afternoon, good evening, and welcome to our 332nd weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. The way this call works is this is an AMA like you see on Reddit. You can ask me anything. You can ask me investing questions, business questions, career questions, personal growth questions, any questions you want to. And my humble goal is always help you take your career, your happiness, etc. to the next level. Now, let's begin. Quick housekeeping announcement. We had an incredible 3-day event this past weekend for all of my clients. Saturday, we did a workshop and a graduation ceremony. Sunday, I did about 12 hours of one-on-ones. And then on Monday, I rented Francis Ford Coppola's vineyard. So it was a lot of fun. I missed all my students I saw. Give me 1 second, guys. I'm so sorry to do this. My backup battery generator is clicking. Let me unplug it for security reasons. Thank you. All right. Good to go. Good to go. All right, let's do this. All right, let me get to your questions. All right. So first up, Armand wrote, "Hey Chris, hope you're well. Likewise. What do you think of the recent movements in LNG prices?" LNG stands for liquefied natural gas prices. It's basically used for heating and other purposes. They're sold all over the world, and so prices are different all over the world depending on where you live. So in the United States, LNG prices are up about 35% year over year in the first 6 months of this calendar year, last I checked, versus in Asia, they're down. The reason they're up in the United States is because the United States is exporting a lot more to Europe because, for obvious reasons, European countries can't really rely on Russia at all. Yeah, so those are my humble thoughts. Next question is, I just joined a Bloomberg trading challenge. Cool. The reported average monthly returns are 35 to 100%, which is absolutely insane. That is insane. It's pretty clear they are not relying on fundamentals. Do you have any advice for me? Yep. Whatever you do, do not day trade. And I've said this so many times before, and I say it with love in my heart. Day trading will end badly for all of you. Okay, it's like going into a casino. You can't make money every single month because every month there's 20 weekdays, meaning 20 days in which the markets are open. Please don't do it. I want you to be a long-term investor. You'll sleep better at night and your returns will be much, much higher, I promise you. There's a reason why we cannot name a single successful day trader that's been successful for decades. You got to be like Warren Buffett and just buy and hold. Or if you buy a stock and you haven't done research on it, then buy and homework. But please do research first. So Warren Buffett still owns Coca-Cola. He bought Coca-Cola around 1990. Whenever he buys a stock like Coke, etc., he always tells himself he's assuming the market's going to be closed for at least 10 years. Be long-term focused. I promise you, you will make much more money this way. Yeah. And when you guys are picking stocks, if you do investment research on a stock and you see 15% upside per year, just buy the VOO instead, ticker VOO. Yeah, and so when I look to do investment research on stocks myself, I try to look for what I believe are 5x5s. What does that mean? Well, that means a 500% return within 5 years. Am I often wrong? Most of the time I'm wrong. But if I'm right and I really do my due diligence, maybe the stock is a 3-bagger or whatever it is, and I don't sell at the worst time. And remember what Warren Buffett said. He said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. All right, next question is, what do you think is the best way to break into risk management as a career? What I would do is this. Step 1, you can sign up for my program if you want me to, because we help you with your LinkedIn profile. We write the whole thing with you. Then we teach you how to sell yourself and how to network to get a job. There's a reason why I humbly have more than 2 million paying students in every single country. But what I would do is this. Step 1, make an amazing LinkedIn profile. Step 2, reach out to people that work in risk management or whatever job function you're interested in that have at least 2 things in common with you. For example, they went to the same high school as you and they live in the same city as you. You send a message. You say, John, hope all is well. LinkedIn email, not email because nobody checks emails, but you've all read every email. So the message content should be pretty simplistic like this. John, hope all is well. I also went to the Toronto French School, which is where I went to school, and I also live in the Bay Area. Please let me know if you have time for a Zoom meeting or a quick coffee. Thanks a lot, Chris. Now, you might be thinking, why the heck would somebody want to meet with me for that purpose? And what I explained there, you can use for sales meetings to sell stuff, investor meetings to raise money, career meetings to get a job. But why would somebody meet with you? Well, think of it this way. Imagine it's 20 years in the future, and you're way more successful than you already are today. And somebody reaches out to you that really reminds you of yourself. Would you take that meeting? Of course you would. Please do it. And a lot of people get frustrated after 3 or 4 emails that they're not getting responses, but it's a numbers game, man. It's kind of like Michael Jordan, who's way better than LeBron James. That's right. Who said, I failed over and over again in my life, and that's why I succeed. It's like dating. You know, you ask, I don't know, 20 people out on a date. If they all say no, are you never going to get married? Of course you will. If you ask 99 supermodels out on a date, and the 100th says yes, are you going to do it? Of course you are. Because the pain of 99 supermodels telling you no thank you to a date is this. But the pleasure for the rest of your life of somebody saying yes is this. And it's kind of like with my kids. Since my kids were born, I've always been telling them 2 things, and they complete the sentence. Number 1, you never, and they say give up. Number 2, you always finish, and they say well, you start. Now, giving up is kind of like me teaching my kids. You know, when they first started to walk or try to walk, each one of them fell down like 100 times each. And I didn't look at them and say, you know what, kids, maybe this whole walking thing isn't for you. It's a game of numbers. That's what business and life is. Just be a pit bull on a pork chop. I remember, as Mark Cuban said, you only have to be right in business one time. Yeah. All right. All right. Next question here I've got is... Malcolm. Hey, Malcolm. Good morning, Chris. Hey. Aside from my stocks and ETF portfolio, I want to begin adding real estate to my portfolio. Although my income is not high, and it would take me a while to put 20% or more down. Is holding an investment property while living at home a good or bad idea? I'm thinking very long-term with this. Thank you. Yeah, it's a great question. So if you live at home rent-free with your parents, which a lot of people do now into their 30s, you know, especially here in the Bay Area where it's expensive, then I think an investment property is a great idea. And the great thing about an investment property is what you can do is this. You can deduct, I've got a prop here. You can deduct the interest, okay, on the mortgage, okay, and make sure obviously that the rent is higher than the monthly mortgage payments. You can deduct the interest, the mortgage, and depreciation on the house as well. And what this does, depreciation expense and interest expense, is it makes your taxes much, much lower. There's a reason why the wealthiest people in the United States and globally own a ton of real estate. One of the reasons is because they don't want to pay taxes legally. And during the first televised debate back in 2016 between Hillary Clinton and Donald Trump, Hillary Clinton said to Trump, it's not fair, you're not paying taxes. And he was very transparent. He said, well, of course not. I own real estate, therefore I can depreciate. Now, it's my dream that all of my students and all my clients make more money 10 to 15 years from now from their investment properties than they do from their base salary. And the best way to decide which property to buy is you can take my complete real estate course, which is available exclusively on my website, and you have to write a full business plan first. Okay, and then once you answer the gazillion questions in here, you've got a one-page executive summary and a massive, massive business plan as well that comes out of it. Yeah, if you have additional questions about that, please let me know. If you're interested in joining one of my programs, please see the link in the description of this YouTube webcast to set up a call with somebody on my team. Thank you. All right. All right, next question from Armand wrote, I'm working on a Formula E student competition, and we need to raise funding ourselves. Any advice on the best way for students to secure capital or sponsorship? How do I go about pitching, etc.? Yeah. So what I would do is, as I mentioned earlier, I gave an example of setting up an informational meeting for a risk management career. Do the same thing with high net worth investors that have something in common with you on LinkedIn. Do it many times, rinse, lather, repeat until you're successful, and never give up. Be a pit bull on a pork chop. In terms of selling yourself and trying to raise capital, you always have to write a business plan. And I don't want anybody on this call to ever start a company without writing a business plan first, please. Now, the way you do that is there's plenty of business plan templates out there. I have one right here. It's part of my venture capital bootcamp. So what you're going to do is you're going to click on each of these items here and then answer questions below. And I teach this in a lot more detail in my program, of course. And then what's going to come out of this are two things. Number one, a massive business plan. And then number two, presentation slides. The presentation slides are the most crucial thing for you, obviously, because you're trying to raise capital. If you're interested in learning more, you can always go to the description of this YouTube video and set up a call with somebody on my team. Now, for those of you that aren't interested in buying my products, it's cool if you don't. I love doing this. I'm going to give you a book for free on how to network to get a job, customers, investors, or anything you want. So what you're going to do is you're going to go to harounmba.com. Then you're going to scroll all the way down to the bottom. And then there's a book here you can get for free. It's called Networking to Get a Job, Investors, or Anything You Want. Check it out. I've had, I think, about 30 or 40,000 people download it over the years. Yeah. All right. All right. Next up, Armand wrote, I'm also studying data science and finance. Cool. I've been really interested in the quant space. What's your take on quants and where that field is heading? Yeah. So I would say anything that involves complex algorithms, calculations, and computer code is a very dangerous sector to want to base your career in. And the reason I say that is because Jensen Huang, the brilliant founder and CEO of Nvidia, he was interviewed last year and he said, whatever you do not study computer science in school anymore. And the reason he said that is because AI was actually made as a replacement for programmers, developers. And it's interesting because I live here in the Bay Area and I'm starting to notice that there's less traffic on Highway 101. And one of the reasons is because big tech firms like Facebook are firing tons and tons of entry-level developers. They're not hiring as much anymore because AI replaces that completely. So if you find that you're in that rut right now and it's tough for you guys to get a job because you studied computer science, you can easily switch to any other career if you network effectively. And again, if you want to join my program, go to the link in the description of this video and my team can help you out. Yeah. All right. All right, next up, Armand wrote, I'm terrible at technical analysis. Could you give me some tips to combine my fundamental and technical analysis? Yeah, absolutely. So whenever you do investment research on a company, the first thing I want you to do is I always want you to look at fundamentals. Okay, and this is my 100-step investment research dashboard to help you pick stocks based on your analysis. There's qualitative research, quantitative, and financial. And when you answer questions based on all 100 steps, there's 700 questions down here, it creates an executive summary. There's a reason I'm showing this to you. So, and this is dummy data. So on this one pager, which a lot of my clients bring to interviews to get jobs, etc. And this is actually the one pager I used to get jobs in that hedge fund industry many years ago, this thing I created. But you print out this one pager, and this one pager crystallizes your thought process when it comes to picking stocks. And you always lead with fundamentals, okay? Like, drivers and catalysts, what's making the stock go up or down if you want to short, management team, total addressable market, etc. Then you move on to valuation. And all this is fed directly in from links in this spreadsheet. And the very, very last thing you're to look at is technical analysis down here. See, it's one of the last things you look at. And the only reason to look at technical analysis is to help you decide when to scale a position to a maximum size 5% of your portfolio. And also when to trim some profits if the stock is a little bit overbought, okay? But don't become a day trader. So per your question, let me give you an example of this. Okay, so let's go to Tesla. And Elon bought shares recently. And whenever Elon buys shares in his company, do your research, but it's usually a good buy. Do your research though first, please. All right, so let me take a look here at the 5-year chart for Tesla. And let me make it bigger here. And then what we're going to do is at the bottom, we're going to look at the relative strength index, okay, this white line here. Okay, so the way it works with the relative strength index is, and this is a technical analysis component, RSI. Whenever the RSI is 70 or 80, it's up here, okay? Usually that means it's overbought and you should sell. right? This doesn't always work, though, which is why you look at fundamentals first, valuation second, and technical analysis a distant third. Okay, so whenever the RSI is 70 or 80, you start to sell. And then whenever the RSI is down around 20 or 30, that might be a time to start accumulating. Okay, and if you go back and you look at 2020 Q1, everything was really oversold. Okay, a lot of stuff was down quite a bit, and so what I do like about the relative strength index, though, to be intellectually honest, is it helps you to be greedy when others are fearful and fearful when others are greedy. And my favorite type of investment is buying a broken stock, but not a broken company. What does that mean? Well, a broken stock means a stock sometimes that's down a lot because of the broader macroeconomic environment. So Q1 of 2020, it felt like you were catching a falling knife when you're buying stocks like Tesla, etc. And that's when the RSI is 20. It's oversold. That's when you accumulate after you've done your fundamental research. You can also look at trend lines, 50-day moving average, 200-day moving average, etc. I can go into much more detail on that as well if you want me to. Thank you. All right, let's move on to the next question here. All right, Prashant. Hey, Prashant, how are you? I think we exchanged emails this morning. I rarely send emails out just because I get so many inbound, but I'm looking forward to you speaking with Anthony, who heads up business development in my company. So Prashant wrote, what key factors beyond total addressable market, management team, financial metrics, competitive landscape, and scalability should investors evaluate while investing in startups? Yeah, and I've got a template for that, and I think you're one of my clients. So go to E31, that's Entrepreneurship Semester 3, Class 1 for the Venture Capital Bootcamp. But I'll show you right here what you missed out on, and you nailed most of them. Okay, I would also include competition, okay, as well as go-to-market strategy. And sales and marketing. Yeah. And the most important thing in all companies is sales. Everything you do, for those who have your own companies, everything you do that is not focused on sales is a waste of time. Try to outsource everything else if you can. If you take care of revenue, which is the same thing as sales, then the rest of your company works out well, right? Grow revenue. Then these other red expense items here just grow at a slower pace, and it drops to the bottom line. Okay, and the same thing with financial modeling. For those of you aspiring investment wankers, whenever you're creating a financial model, or for those of you that want to work at a hedge fund, spend most of your time trying to forecast revenue. Okay, an object in motion will stay in motion. And then all the other line items as a percent of revenue, just look at historical patterns. Hopefully this goes up more than this, which then drops directly to the bottom line. The reason they call it the bottom line is because this is an income statement. This is the bottom line. And up here, this is your top line. Yeah. Okay. All right. And then please continue to type your questions, everybody. Thank you. Next question is, can you help me understand the difference between business, finance, and AI bootcamp? Yeah, absolutely. And I'll make this very quick, I promise you. But there's three main products that we sell. Okay. One is, and you can go to learn.harounventures.com to learn more. There's Haroun Business Academy, where we help you scale your business and help you with everything non-finance oriented, like if you want to get a new career, etc. The Finance Bootcamp is if you want to learn about investing and you want to get a job at investment banking, etc. One of our students, Vicente, a couple of years ago in my program, he got a job at Goldman Sachs investment banking in New York City at the associate level. He didn't go to a target school and he had 2 years work experience. Pretty cool. And then we have an AI bootcamp with Luca Anderson, one of my best friends. I'm actually 6 feet. He's like 6 foot a million. So I had to bring myself up there. But according to Google developers, Luca is one of the top 100 minds on the planet when it comes to AI and machine learning. And Oxford University recently called him one of the 2,000 smartest Serbians ever to live, I think. Yeah, I went to his wedding a couple months ago. Really good guy. Everybody's tall there, man. Yeah, I went to Belgrade. All right, next question is from Ray. Hey, Ray. Who wrote, Chris, thank you for being here every Thursday. Here are some questions. Thank you. It's always great to be here as well. I live for this. And for those of you who haven't found your passion in life yet, I want you to think to yourself, if you're given 30 days off and you're not allowed to travel, you can't go to work, you can't go to school, what would you do with your time? For me, it's this. I absolutely love doing what I'm doing. Otherwise, I wouldn't do it, and I wouldn't have retired from Wall Street a decade ago. We're here to serve others, right? Okay. All right. Next question is Pinduoduo double listed? Does this make it safe? Yeah, it is double listed. So that's a German company. So it's on the DAX as well as in the United States. In terms of does it make it safe? I'd be careful with double listed companies, only because the ADR version, American Depository Receipt, sometimes is not as liquid. Okay, so for example, if you look at Nintendo stock, NTDOY is the ticker, you'll see it doesn't really trade very much. But if you look at Nintendo in the Japanese markets on Topics, Nikkei, ticker 7974, it's very liquid. It trades like water. And you never want to own a stock where you own more than 10% of the average daily trading volume. And the reason I say that, and I'll show you an example with Nintendo in a second. The reason I say that you don't own more than 10% of the average daily trading volume is because it's hard for you to sell without dragging it down if you need to sell. And remember that in the fall of 2008, when we were within 24 hours of bank machines not working, a lot of hedge funds went belly up. They went bankrupt because illiquid stocks owned you in a down market rather than vice versa. Let's take a look at Nintendo quickly here. Okay. All right. So let's go over here, and I'll kick it off with Nintendo, NTDOY. Okay. This is the pink sheets, United States here. Okay. Actually, I think what I'll do is I'll look here at the stock so I can show you liquidity as well. Okay. So let's go here. NTDOY. Doesn't really trade very much. It's rather thin. All right, so we go down here for Nintendo, and we see here the average volume. It's actually a lot better than it used to be, is 1.4 million shares, right? But if you're an institutional investor and you want to buy much, much more, then you want to buy it on the Nikkei. Okay, and the ticker there is 7974 for Nintendo. Let's see if it comes up. All right, I'll do Nintendo. Here it is here, T for Tokyo. Okay, and the average daily trading volume here is 4.5 million. Of course, this is in Japanese yen as well. So if you're an institutional investor, you want to buy it on its primary market if you can. Yeah. All right. But of course, you want to do your own due diligence first by looking at the 100 investment steps I showed you earlier. Always kick it off with fundamentals, then valuation, and then a distant third is technical analysis. Yeah. And if you have follow-on questions about that, please let me know. Thank you. All right. Next question is, if an auditor resigns and another big four starts to audit, how many years do we have to wait to be sure that everything is in order? I would say a minimum of 6 months, but do your research first because every situation is different. Let me talk quickly about auditors. I don't ever want you guys to invest in any company if it doesn't have a well-known auditor, no matter what. Okay? And it used to be called the Big Five until Arthur Andersen unfairly went belly up back in 0102. The Big Four are as follows. Don't ever invest in a company if you don't have one of these auditors. And this is me buying time to think of who the hell are these auditors. Okay. So you got Deloitte, Ernst & Young, PwC, and KPMG. If they resign, where there's smoke, there's fire. And let me show you really quickly how to do analysis on this. I recently published a course which is called Forensic Financial Statement Analysis using Artificial Intelligence. Okay. So you have to, and this will tell you how to read financial statements like a good book and the footnotes, etc. And an executive summary comes out of this. You can bring this to your informational meetings, and a 24-page due diligence report as well. But part of the process when you look at the 10K, meaning the annual report, is you're going to look at the audit report. Very important. Okay. And what I've done here is I've created a ton of AI prompts for you so that you can analyze any company you want to, and then grade the company as well. So there's the audit report and then something called the MD&A. And you got to read these things because it tells you what the future of the company could look like. The audit report is crucial to read as well because it's basically whether or not those big four accounting firms bless the company's financial statements or not. Okay, crucial you read it. It's in the 10K. I teach this and much more when it comes to forensic financial statement analysis in my programs. Just set up a call with my team if you're interested. Yeah. All right. Next up, UiPath's reported DSO is 115 days. Let me explain that first of all. So DSO means days sales outstanding. And what that means is how long it takes you to collect cash, right? So we don't care if a company has amazing revenues if they don't collect the cash for it. And if the DSO, days sales outstanding number of days increases materially, the company could go bankrupt. Okay, and it could be a factor also of too much inventory and other factors. Now, the DSO of that tech company, which you mentioned there, called UiPath, is 115. That's really high. The average DSO for a tech company, and I know UiPath is software, is between 30 and 50 days. Every sector is a little bit different, and I don't want you to invest in companies where the DSO is very, very high after doing your research. Let me show you here. So within this course here, the forensic financial statement analysis using AI, let me just scroll down here to, and this file here is 7 megs. I'm such a nerd, I had fun making it. DSO, okay. So here's a calculation for DSO, okay? It's accounts receivable divided by revenue times 365. You don't want accounts receivable to be high ever, or you're in trouble, okay? And then I here in 3.1.2, I have an exercise on that as well. DSO right here, 3.1.3, apologies. And if we look here at the average range, so I was doing an analysis here on Apple. So the average range for an IT company for DSO is 30 to 50. Okay. And the reason is because shorter DSO due to software licensing and efficient B2B invoicing, it's really easy just to deliver a software product. They just download it usually, right? Now, other sectors have higher DSOs. Okay, so for example, in industrials, right, it takes a little bit longer to ship products, 45 to 65. But the bottom line with your company there, UiPath, you're looking at 115 is way above the high end for an information technology company. All right, let me change camera angles. Let me mix this up a bit. All right. What is your opinion on specialized platforms like Moonfare that provide access to top-tier private equity funds with lower minimums? Yeah. Actually, they're great after you do your research. And so Moonfare, for those who are not familiar with it, it's a company that has, I think it has a return of well above 20% since 2005 or so. And it's a way for you guys to be able to buy in to private equity investments. And you can buy into private equity investments from the top PE funds on the planet. So KKR is a part of that as well. Now, they say, Moonfare says that they only accept about 5% of all the private equity companies they look at as part of their portfolio. The problem, and I have to be intellectually honest, is you're paying higher fees. And here's why. So a private equity company, so what private equity does is if a private or a public company is undervalued, not being run correctly, a private equity firm will buy it or invest in it, turn it around, and then make a profit, maybe take it public again, right? And Electronic Arts is going private for that reason. It's the biggest leverage buyout in history, I think $55 billion. It's just not being run well. And so the private equity firm, what they're going to do is they're going to try to fix it, maybe parachute in a new management team, and then sell it back to the markets, for a handsome profit many years from now. But the problem with Moonfare is this. So whenever you invest in private equity companies, okay, or private equity funds, the fee structure is 2 and 20. What that means is this. You pay an annual 2% management fee, and then you pay a 20% incentive fee. And that's similar to how venture capital and hedge funds works to the extent that if you're an investor in a private equity fund and you're up 100%, you only get to keep 80% of that because the other 20% goes directly to the company. Now, the problem with Moonfare is there's an additional 100 basis points that's added on to that 2% annual management fee. Okay, so you're paying fees on fees. Yeah. And I don't want you guys to invest in anything private equity oriented without talking to your accountant first, please, to make sure that you're an accredited investor and also understand liquidity. You're not going to get your money back for probably a decade, if ever. Okay, very illiquid asset class. All right. Next question is this. Is now a relatively good time to buy bonds? Yeah, do your research, but generally speaking, yes, and here's why. Whenever interest rates are expected to be cut, it's usually a decent time to buy bonds because you can lock in that higher rate on that investment, and then as rates go down, this amount is locked in. I hope that makes sense. And I can do a teach-in explaining bonds from scratch if you want me to, along with zero coupon bonds and what the hell that means. as well as federal debt, how the Treasury works in the Federal Reserve, as well as how the government issues bonds to pay for war, et cetera. This is a real bond from World War II. Yeah. I'll leave it up to you guys. Yeah. One quick thing I want to say. Be really careful with municipal bonds, everybody. And I say this because, yes, there are tax breaks for investing in municipal bonds, but you can lose every penny. And a lot of investors that bought municipal bonds in Orange County, which is a region in Southern California, about a decade ago, lost every penny. Yeah, just be careful with that. Yeah. All right, next question is, what is your opinion on the aerospace subsector? When is it the right time to buy an ETF there? Yeah. Yeah. So if you're investing in defense contracting companies, I hate to say this, but it's if you expect war to occur, you invest. So after 9/11, I backed up the truck and I invested a lot of money when I worked at Goldman on Lockheed Martin, ticker LMT, Northrop Grumman, ticker NOC, General Dynamics, ticker GD, et cetera. Yeah, but generally speaking, when it comes to aerospace companies, including Boeing and Airbus, which is the oligopoly that controls the airline markets, when you're investing in these companies, you got to look to buy when they're not profitable. What? Well, cyclical companies tend to make a lot of money when the economy is doing well, and they lose a lot of money when the economy is not doing well. And so if you buy them when the PE is low, you're going to lose money in many cases. Let me give you an example with Caterpillar, ticker CAT, company based in Peoria, Illinois. I visited with the management team many times, great company in Peoria. So Caterpillar, similar to Boeing, ticker BA, is a cyclical company. And Caterpillar right now, I think, trades at a price to revenue multiple of around 3 times. But back in 08, and I think maybe closer to 01, it traded at less than 1 times revenue. So you want to look at revenue multiples as well. Okay, every sector is a little bit different. But generally speaking, when you look at other companies, I want you to value them based on your earnings estimates in 5 or 10 years. And I can talk about that in a lot more detail if you guys want me to. You're the customer. Let me know what you want me to teach about. Humbly. Thank you. Okay, next question is, if I want to buy a gold, I have props for everything. If I want to buy a gold ETF in the next year, meaning ticker GLD, which is the only one I buy, is it wise to set a limit order for 5% of my position at 10% discount from the current price, or is there another strategy? Yeah. So I tend to want to buy all asset classes when they're out of favor, right? It's kind of like Wayne Gretzky, who's my hero. He was very successful, not because he skates where the puck is, but because he said he skates where the puck is going to be. And what that means is you want to buy investments that people are going to like. If everybody on the planet is buying gold or a certain stock today, think about it. There's really not that many incremental investors to buy and push it higher. You want to buy it when it's out of favor, maybe when the relative strength index is relatively low after you do your fundamental and valuation-based research, of course. Yeah. But there's nothing wrong with limit orders in general, as opposed to market orders. You can always save a couple of basis points. Okay, next question is, how do you explain that the S&P, small cap 600, although more volatile, has worse returns than the S&P 500 in the last 15 years? So small cap stocks are relatively illiquid. What's done incredibly well in the past 10, 15 years are the large cap, big, ugly tech stocks. And what breaks my heart is that you have all these massive tech companies that dominate now that should be broken up by the DOJ. They're not for geopolitical government reasons. I don't want to go there. But the problem is that with these massive tech conglomerates, innovation can start to die. Right? So there really haven't been that many companies that have come out to compete with Apple, Google, et cetera. And Google, Google, meaning Alphabet, owns the 2 biggest search engines in the world. Number 1, Google. Number 2, YouTube. Kind of makes sense that the government should make it a little bit more fair, right? So hopefully that explains why larger cap tech stocks have outperformed. Now, the way the government has been regulating these large tech companies is they won't let them do small tuck-in acquisitions even. Yeah. And that's one of the reasons why we haven't heard of massive acquisitions on the tape. Yeah. All right. And Justin, thank you so much. Justin Bourgeois, that's my little sister Elizabeth's last name now too. She got married. Justin, thank you for that donation. That'll go to the schools we're building in Africa. So Justin wrote, have you seen the SOFR spiking in the last couple of months? DXY is having a big rally today. Could government shutdown also cause liquidity issues? Yeah. I haven't kept up to speed with those companies and those tickers. In terms of government shutdown, liquidity issues, it's a non-event. Okay, it's just government trying to get a deal done. That's it. And you know Trump, the way he works, and always focus on what Trump does, not what he says. But the way that when people tend to negotiate, Party A says I want this, Party B says I want this, they meet in the middle. With Trump, Party A says, Trump says I want this, the other party says I want this, and they meet maybe a little bit over here. Yeah, don't freak out when it comes to government shutdown. This happens all the time, threats of it at least. Okay, it's not the end of the world. And don't pay attention to the media, please. The media is trying to captivate you to keep your attention. They'll say stuff like, find out why the U.S. economy is going to go into another Great Depression after this commercial break. Don't pay attention to the media. Don't pay attention to anybody that speaks gooder than us, etc. Always do your own research. Okay, and remember this. I learned this when I worked in the hedge fund industry. Things are never as bad as they seem. And things are also never as good as they seem. Be unemotional when investing and in business in general. Yeah. Okay, Ray wrote, what are some good opening phrases when you go to a networking event? Yeah. So if you meet a beautiful woman, you say, do you have a quarter? And they'll say, sure, why? And then you say, because I want to call my mother and tell her I fell in love. So this is terrible. Okay. I'm not going to talk about cheesy pickup lines because I will be canceled. Not that I give a fuck, but just kidding. No. So what you want to do for networking events, a couple things. When you go to a networking event, to network, to get customers, a job, whatever it is, you want to make sure you have business cards printed up. And I'm going to show you the exact business card to get that will help you stand out. It's classy. I've used it. It's helped me a lot, tremendously. This is me buying time while I think about, where's that website again? Just kidding. So it's called moo.com. Okay. And these business cards, what I want you to do is I want you to get the small ones so it can help you stand out. And they're really classy. I'll show you. All right, give me a second. Yeah, this guy here, okay? I want you to get this model right here. Again, it's moo.com, and order these, okay? And always have them handy. And then obviously the second you meet somebody at a networking meeting, you exchange business cards, that way you get theirs, and then you connect with them on LinkedIn. So what do you talk about in these networking meetings? Well, you want to do research on these people before the event if you get access to the list of who's attending, or even during the event if they have a name tag on. You can always just, as other people are trying to talk to them, get their name, go to your mobile phone, look at LinkedIn, see if you have something in common with them, and spark up a conversation about that. Don't make it too obvious, okay? And if you have access to their Instagram profile, find out who they follow. If they follow baseball, you can talk about baseball. Just find something in common if you can. Yeah. And then generally speaking, if it's a career fair, you can always ask them, can you please let me know what a day in the life is like at your company in the job function you work at? Now let me transition very quickly to teach you how to get a meeting with any CEO. Okay. So what you're going to do is this. Okay, and this works sometimes it doesn't. You're going to start going to shareholder events, and just do a search on shareholder meeting and company name. And I've done this and done incredibly well, humbly, because of what I'm about to tell you. At a shareholder meeting, hardly anybody goes. They serve really bad coffee, and there's a bunch of old people at it. But usually the C-level executive management team is there, CEO, CFO, CMO sometimes, etc. And some shareholders are obviously in the audience, as well as some board members sometimes. Now, and usually it's at a hotel or the corporate headquarters of the company. After the event wraps up, what I want you to do is this. I want you to go up to the CEO and introduce yourself. And the CEO is not going to leave until you do, because the CEO wants to set a good example for all the investors in the audience, employees in the audience, as well as board members if they're there. And what I want you to do is introduce yourself to the CEO, exchange business cards, and then say something like this, right? If you're looking for a job. I'm really passionate about working for your company. I use your products or services. I love them. Is there anybody in your company I can talk to about maybe applying for a job there? And he might say, sure, talk to Sam Smith, who heads up HR. Then what you do immediately is you go directly to LinkedIn and you send Sam Smith, an email and say, Sam, hope all is well. I met with your CEO today, and he or she told me to reach out to you. Please let me know if you have time for a coffee or a Zoom chat. Thanks a lot, your future boss. Thanks a lot, Chris. Do that. Or if you're trying to sell something, right? A lot of salespeople find creative ways to meet with people. So what you're going to do is this: you meet with the CEO during at the end of the shareholder meeting. You say, I've got a product and service that I'm really confident that can save you, X dollars per year. Is there anybody in your company I can talk to about this to help? And the CEO might say, sure, talk to Jennifer Croswell, who heads up operations. Do the same thing. Go to LinkedIn and say, Jennifer, I hope all is well. I met with your CEO today. Obviously, put the name of the person who said I can reach out to you. Please let me know if you have time for a coffee or a Zoom. Thanks a lot. This works. Now, anybody else out there have really cool ideas on how to network to get meetings with C-level executives? Please share with me here. Thank you. Okay. My CMO says, Chris, just get people to engage. Oh, click the like, subscribe button if you want. Yeah, you don't have to. Yeah. All right, so let me move on now here to the next question. All right. Ray wrote, what if a portfolio consists of only 17 ETFs? Is that number too big? Yeah, so generally speaking, what I recommend, I'll talk about ETFs in a second, but if you have a stock portfolio, I don't recommend having more than 5% in any one investment, meaning you're going to have at least 20 stocks. When it comes to ETFs, ETFs are already diversified, so you can violate that covenant that I have if you want to. Make sure the ETFs are very, very liquid, obviously, and do your research. You can always go to etfdb.com to look at 5,000 ETFs. That's etfdatabase.com, etfdb.com. Yeah, and let me reiterate that if you guys do investment research on a stock and you've done the work and there's only 10 to 15% upside, buy an ETF instead. Yeah, the kind of stocks you want to do investment research on using my templates are the ones where you see massive upside over the next 5 to 10 years. Yeah. All right, next question is for ticker KMTUY. The price to sales is under 1, but still the price looks very high when I see the past. Yeah. So you're going to have to do investment research on this to find out why the price to revenue, meaning price to sales, is below 1. Maybe there's going concern issues. Maybe the company's not profitable. Maybe if you analyze the financial statements and look at the footnotes in the 10K, if they file a 10K, you might see that in the footnotes over the next 5 years, there's an insanely high amount of debt coming due. Right. So what I want you to do is do two things to decide if you want to buy a stock. Okay. Number one, what I want you to do is I want you to complete this forensic financial statement analysis using AI for that company. Okay. And then you're just going to put in the company name here, the ticker here, and then the AI prompts level here. You can select 8th grade all the way up to hedge fund level. I do 8th grade because that's my maturity. Answer a ton of questions, especially about the footnotes, which I just talked about. And what comes out of this is 1-page executive summary and a massive detailed report. Now, what you can also do is you can complete this spreadsheet here, which is 100 steps, which will help you to pick a target price for the company. And it also helps you to be very long-term focused when you do your due diligence. Okay. Next question from Ray is, how is the Meta RSI doing? Yeah. What I like about Meta is that the founder CEO is still running the company. I never invest in a tech stock when the founder and CEO is not running the company, ever. Okay. All right, so I'm going to go here to Meta. And the reason they rename themselves Meta is because they know it's only a matter of time till the DOJ breaks the company up into separate parts. Those separate parts are going to be Facebook, Instagram, WhatsApp, and miscellaneous stuff. Same thing with Google. They renamed themselves Alphabet. One of the reasons might be because I think one day Google and YouTube will be separate companies. All right, let's go here year to date. Let's look at the chat, as they say in South Boston, and let's look at the RSI. So it doesn't really tell us very much because it's closer to the middle of the range right now. You see here it was overbought at an RSI of about 80, pulled back. Yeah. So it doesn't always work, but sometimes it does. So the RSI tells us niente, nothing as of now. But we know that's less important, right? Fundamentals valuation are more important. Next question is, what is the next course you're working on? I'm working on a digital marketing course with my CMO, Cassandra Cox. Cassandra has worked with me for like more than 5 years now. And we're going to start recording that, I think, this November. Yeah. All right. Next question is, what stocks did you lately decide not to invest in after research and why? Yeah. So I'll let you do your own research. But the way you have a good idea is if you finish the entire 100 stepper. Okay, that template. Same thing with the Venture Capital Bootcamp. The way you know you have a good business model or a business model that has a higher probability of making it is if you finish the business plan template I provide you with. And these are all set up as safety nets. I really care. I do. I feel like I have a fiduciary duty and a fiscal responsibility to protect you, to help you do your own investment research. You'll notice I don't tell you what stocks to buy. It's not my job. Give a person a fish to eat for a day. Teach a person how to fish they'll eat for a lifetime. Don't ever rely on me, Jim Cramer, or whoever on television tells you what to buy. Always do your own research. Okay? Jim Cramer, he's a brilliant guy. He's the second smartest person ever worked at Goldman Sachs after Robert Rubin. But he can sell. And CEOs, right? It's just the way it works. It's Darwinism. Those who rise to the top are usually great salespeople. And when they get on television talking about their stock, their company, they're going to convince you. I don't want you to pay attention to them or me or anybody. I want you to pay attention to you because nobody is smarter than you. Yeah. All right. Next question from Tommy. Hey, Tommy, how are you? Tommy wrote, I-Series bond versus VU versus 529. I own all three. And let me explain it really quickly. So the I-Series bond, if you live in the United States, you can invest up to $10,000 and you'll get a guaranteed return from the government, even if interest rates go down. And the way it works with the I-Series is every 6 months, the interest rate resets. I think it's every May 1st and October 1st. And I'll show you what the rates are right now. Okay. So let me go there with you. Okay. And what you're going to do is, let's go on a journey together to treasurydirect.gov. Direct means you buy directly from the Treasury. And if you're a big firm like a JP Morgan, Goldman Sachs, you're not allowed to sell these products here. This is direct to consumer. Okay. So what you're going to do is you're going to go down here to Series I savings bond. Okay. So as I mentioned, every May 1st and October 31st, I made a mistake there, the rate resets. So if interest rates go up a lot, or expectations of interest rates are up a lot, which is not going to happen, by October 31st, this will be lower. Okay. You'll never lose money on it, though, even in a deflationary environment. So what you're going to do is just read this information here. I think you could invest $10,000 to start. Just find the number here to call the government directly to invest in these if you want to. You can only do this if you're in the United States. I think it makes sense to have. I own some. Yeah. A lot less now. I own tons more when it was about 10%, as I disclosed on my webcast years ago. Yeah. Now, in terms of the other asset classes, you mentioned VU and 529. So I own the VU as well. I want you to do your own research. And usually whenever you see a ticker that starts with the letter V, it means Vanguard, the best ETF company on the planet, underwrote that. And so ticker VOO is the S&P 500. And I think that the very last company on the planet to ever go bankrupt will be the U.S. government. That's why Series I bonds are safe. But I think that S&P 500 companies are much better run than the U.S. government. And so I'm incredibly bullish on the S&P 500. I think in the next 15 to 20 years, the S&P 500 will be up an average of closer to 20%. There'll be big down years, though, but we don't care. We don't care about the path. We care about the destination. One of the reasons why is I think that AI is really going to help companies to make a ton more money. Okay. So these red items here, these are operating expenses. Okay. So I think that AI is going to replace a lot of people in R&D, as well as a lot of people in marketing and indirect sales as well. And then the miscellaneous bucket of G&A, general administrative, which sometimes means repetitive work, will be replaced by AI. So if these red things go down, this green thing, net income, goes up a lot. Yeah. And companies haven't really looked into growing revenue using AI yet either. I'm using AI a lot in my company, and I have a groundbreaking new product I will announce to all of you in a couple of weeks. It's in stealth mode right now that will help you all work smarter and not harder when it comes to business using the stuff that I teach. Now, the last component of what you asked about the 529, if you have kids or if you're pregnant, expecting, congratulations if you are, what you can do is you can invest tax-free. Okay, so a 401k is a retirement savings account, and you can put over 20 grand in it every year if you live in the United States and let it grow tax-free. A 529 is similar to that. You get about, I think, around $15,000 or so-ish $1,000 per year that you can save for your kids before they go to college. And so if, let's just say that your kid is born today and 18 years from now they want to go to college. If you put that 15 grand in ticker VOO, do your research first, right? And then you wait 18 years, that's going to turn into $700,000. Okay. You got to put the 15 grand in every single year. Do it for 3 kids, you got $2.1 million. Okay. And the great thing about 529, which is an educational savings program, is when you take the money out, it's better than a 401k, and here's why. When you take the money out, if you're going to pay for education, like tuition and stuff, it's tax-free. It's a great deal, right? Yeah. So anyway, and I want all of you to, spend what is left after saving and not save what is left after spending. I want all of you to have money taken out of your paycheck every 2 weeks, if you can do it, and put directly into 529s or 401k, Roth IRA, whatever it is. Just save for a rainy day. And live below your means always. Yeah. All right, next question is from Xander, which is, and let me show you my studio here as I go and get a prop. Okay, so Xander asked a question. He said, give me 1 second. The question is, should I buy Ethereum or the Ethereum ETF? Okay. So many of you know what this is. Okay, this here is the Ledger Nano X. And there's a reason why it's encased in plastic and I haven't opened it. The Ledger Nano X is a cold storage wallet where you can store your cryptocurrencies. The problem with using devices like this, and there's also the Trezor, which means vault in Bulgarian. I think I have a Bulgarian student. The problem with using these things to buy cryptos and store them is it's so damn complicated. When you set them up, you have to write down between 12 and 24 little key phrases. And once you finally get this thing set up, and then you want to buy Ethereum or Bitcoin or other cryptos, you're like, dude, this is so complicated. I'm going to cut my order in half. Then, when Bitcoin ETFs were released, what happened was Bitcoin went through the roof. And there's many other reasons why Bitcoin went up as well. And I think Bitcoin's going to reach $1 million at some point in my life. I don't care when. I don't really care about the path. I care about the destination. But by buying ETFs for Bitcoin, Ethereum, etc., it's so much easier to do. So you don't cut your order in half. And it's very liquid. Okay? It's the same thing with gold. When the gold ETF, ticker GLD, was released in 2004, it was a huge event for investors because now we can buy gold and we know it's real, unlike this. And it's liquid and we can sell it when we want. And it's easier to buy instead of going to some seedy part of town and paying cash for one of these things. So that's why I think that the fact that you can buy ETFs now for cryptocurrencies is a wonderful thing, and it's an incredibly positive catalyst. In 2012, when I started investing in Bitcoin, 100% of the ownership was retail. Now over 50% is institutional, okay, the big mutual funds, hedge funds, etc. And that really moves the market. So I own 4 cryptos, including the one you mentioned there, and I publicly disclosed this years ago. I bought the following. I bought Litecoin, Ethereum, Bitcoin, and Ripple. And I think the best way to buy Ethereum and Bitcoin is not using these things, but using ETFs, right? Because if you lose this, you could be in big trouble. Yeah. And only use very high profile, credible ETF companies as well. You'll pay higher fees, like closer to 50 basis points, but at least you know you're not getting scammed. Yeah. Okay, and then P.O. Zenki, I read everything, wrote, do not use TA. It's not working dummies. I don't know what TA is, sorry. Yeah. Okay, but my teaching assistant is great. He's been with me for over a decade. Yeah. And I'm the dummy. Yeah. All right, Manas. Hey, Manas, how are you? Manas wrote, good morning, my dear mentor. Chris, please, hope all is well. Sick here by my side. Let's go. I hope you feel better, man. Hope you feel better. So Manas wrote, how do you not get burned out when you see a ton of opportunities for money and for growth and not burn yourself out so bad? Yeah. So what I recommend doing, and I'm a hypocrite because I always talk about taking at least one day off a week. I violated that in the past 2 Sundays. I worked all day Sunday, this past Sunday and the previous Sunday. And I'm a little bit burned out right now. I did it because I had my annual event from my clients that flew in from all over the world. And I worked on Sunday. Yeah, so I'm a little bit burned out right now. But the way that you make sure that you don't burn out and the way that you ensure that you get a lot more stuff done is every single day, I want you to print this out, okay? And I'm covering this up because I spilled coffee there. At least I'm transparent. Now, for anybody in my MBA degree programs or any of my programs, go to the Unabridged MBA in your curriculum and go to PG11, that's Personal Growth Semester 1, Class 1, and print this out. And what this is, it's a daily scheduling system. And the daily scheduling system, you schedule each day the night before, okay? And schedule you time as well, right? So anyway, you time can be the gym, etc. Taking time to call a buddy, calling your mom. Everybody call your mom, please. Yeah. Okay. But if you want to get something done, give it to a busy person. Yeah. And set deadline dates too, brother, when you do this, okay? So for example, if your goal is to launch that cryptocurrency course, I know you're working very hard on right now, put a deadline date of, say, I don't know, December 1st. And as Elon Musk said, if you set a deadline date of 3 years from now, you'll get it done in 3 years. But if you set a deadline date of 3 months from now, you'll get it done in 3 months. Document this stuff. There's a reason why people are in great shape that many of us work with, and they have it all. It's because they stay busy. Yeah. And Tony Robbins said that 90% of people give up on their New Year's resolutions by the 3rd week of January because they don't set a deadline date. So set deadline dates. And this past weekend, what I did was I did a U 2.0 personal growth workshop with my clients flew in from all over the world. And I asked you tons and tons and tons of questions. It's like a Tony Robbins event, but not as good. And then what comes out of it is you have this daily one-pager you're going to complete every day the night before, okay? Every day the night before. And I promise you, if you guys do this, you will be way, way, way more productive and happier and well-rounded too. Let me give you a light version of this you can download right now, okay? All right, so give me 1 second. And sign up for my program if you want the premium version. But what we're all going to do together is let's go to harounmba.com/schedule. And what I'll do is I'll paste this in the chat as well if you guys want to download this, okay? Okay, there we go. I just pasted it. Great. And if you click here, you're going to get a small version of this file. It's in PowerPoint, but Google Slides can open and everything. Okay, so let me go here. It's called Today's Accomplishments. Okay. And the way it works, this is me buying time while it opens. Come on. The way it works is you're going to schedule each day the night before. Okay. And you just remove this here. Okay. And this is old for me. I must have made this years ago when I made a crypto course in 18. But what you're going to do is you're going to write the day number. So day 1. See how many days in a row you can do this, okay? And then the date. And you're going to do this tonight for tomorrow. Then you're going to put tomorrow's schedule in. And at the end of tomorrow, before you schedule the next day, you're going to score yourself. Take 10% off for everything you violated. It's very subjective. Like if you didn't have dinner with the family, you didn't do weights, whatever, take off 10% each. If you didn't get 7 hours sleep, take off 10%. And all I want you to focus on is improving every single day. Okay. And up here, this is different. You can always customize this if you want to. But for me, if I didn't put God first, then I'd take off, 40%. If I spent too much time surfing the web, people still say that, or doing emails, I take off time. And then this is just other personal stuff here as well. I got to put customers first. Yeah. So again, you can always go to the link I shared in the description there. For those of you listening to this on podcast or replay on the gazillions of networks we're on, just go to harounmba.com/schedule, all lowercase, harounmba.com/schedule. Let me go back to Big Chris mode. Let's try this angle. And when I do these calls, my desk gets progressively messier, as you can clearly see. But I'm an open book, eh? Okay. All right. Give me 1 second here. Okay. All right. Next up, Tommy wrote, what advantages does your Finance Bootcamp offer compared to your MBA program? Yeah, it's a little bit more tailored. It actually includes the MBA program. It includes everything. Everything I've ever made is included. And basically what I do is I train you how to get a job in finance, okay, and also advanced financial analysis. And the way I do it, let me see if I can share a screen here. The way I do it is I have tons more templates that you guys haven't seen before. Including a 150-page exercise book. And what I do is I train you how to answer every question in a finance interview. Everything, okay? 150-page exercise book and much, much more. If you're interested in joining this to, learn how to invest better or get a job in finance, change careers, I don't care how young or old you are, just go to the link in the description of this video and set up a call with somebody on my team. Yeah, thanks. All right, next up, Manas wrote, AI companies are popping out left and right. Every company is an AI company, or else they're dead. When and how can the bubble burst? 95% of companies not getting any ROI from AI. What are your thoughts? Yeah, it's human nature always to chase bubbles, right? All ships rise. It happened in the 1600s in Holland. Everybody bought tulip bulbs, and tulip bulbs went up several thousand%. Everyone knew it was unsustainable. It happened with the housing bubble, between the year 2003, when interest rates went down to 1% in June that year, all the way up until, late 2007. It's happening. It's happening now, of course, with AI. And one thing I learned, I worked for a brilliant man named Art Sandberg, who died of pancreatic cancer, I think last year. God bless him. I miss him. But this is when I was at Quant, which is the largest tech hedge fund on the planet. And we invest in other sectors too. And I remember, I think it was 2006, I think it was. And we pitched Art housing shorts like Lennar, ticker LEN, and KBH. And the thesis was that we're in a bubble. Therefore, these stocks will crash. And we were pitching the short, and he said to us very nicely, really good guy. He said, son, let me stop you right there. I've been around long enough to know that markets peak, markets trough, bubbles burst, etc., but never stand in the way of insanity. Yeah. So if you're going to do investment research on an AI stock, make sure to complete the 100-step template I showed you before as well, please. It's important. All right. And I invested in Facebook as well as Palantir when I worked in venture capital when they were private companies. I no longer own Palantir. Yeah. All right. Manas wrote, why is AMD not as good as Nvidia? Yeah. So it's a simple answer. And that is this. The founder is not running the company. That's it. I never invest in tech companies when the founders don't run the company. Because what happens is bureaucracy sets in. Founders of companies, the board loves them. The board lets them be long-term focused, and they don't really care about quarterly earnings. They're long-term focused. So Larry and Sergey from Google, right? They're so long-term focused. They don't care about the quarter as much. The same thing with any brilliant CEO who's the founder. They're long-term focused. If you bring in somebody else to be the CEO, that's not the founder. They know they're on a tight leash. And if they don't perform every quarter, they're done. And it's as ridiculous as day trading. You can't be short-term focused. And bureaucracy sets in too in companies where the founder is no longer running it. So I'll give you an example. A very good friend of mine worked at Hewlett-Packard for years before it got broken up. And once the founders left HP, it didn't do as well. Carly Fiorina was brought in, I think, back in 01, 02. She destroyed the company. So many CEOs destroyed the company because they weren't the founders. And I asked my buddy, he wasn't happy working at HP. He said, Chris, I think I want to leave. Can you help me? I was like, of course I can. So I went to the HP's headquarters in Palo Alto, and I sat down with him, and I looked at his resume. And I said to him, what have you learned over the past couple decades here? And he said, well, I learned how to navigate HP politics. And I said to him with love in my heart, dude, that's not a portable skill. And so if you're running a company and you're not the founder, you're short-term focused and politics steps, it creeps in. And if you're an executive climbing the corporate ladder in a company where the founder's no longer running it, are you really going to take a risk and try to create a brand new product when if you fail, you're no longer climbing that ladder? Of course not. There's a reason why Peter Thiel's fund, venture capital fund, is called Founders Fund. You invest in founders. That's what a company is. People. And so before you analyze any company, always start with the management team. And there's a reason why, with my investment research dashboard that many of you use to pick stocks, there's a reason why the most important step, the first step, is management. We start with management. And the last step down here, as you all know, is technical analysis. Yeah. All right. Okay. How important is TSMC, which is Taiwan Semiconductor, for China and America in the long run? Incredibly important. And the Trump administration, what they're doing is they're creating a lot of incentives for semiconductor companies to operate here in the United States, right? And you all know that the United States government invested in Intel. It is a huge national security issue. Having TSMC where they are right now. Yeah. But Taiwan is great friends with the United States. So I'd say it's very important. And what I have a lot of clients that work at very big tech companies. I'm not going to disclose which ones. And when they talk to people in China, like clients, they're not even allowed to use the words AI. Yeah. Okay. Hey, Sean, how are you? Sean is one of my amazing students. He and his wonderful wife, Michelle, are both in my program. You warmed my heart, man. It was such a pleasure meeting with you both in person this past weekend. Sean is finishing up his PhD at Berkeley, and he's also got a company that makes $20,000 net every single day. It's an unbelievable story. You inspire me. So Sean wrote, hi, Professor. When I forecast the revenue for the company, and the stock price hits that price target, but earlier than my forecast, how do I best reevaluate my model or just take profit? That's a great comment or question. So what happens is with institutional investors, so when I worked at really big hedge funds and my own hedge fund as well, I would have a price target on a stock. And that price target was usually based on a P multiple 5 years from now. So I forecast the financial statements. I got earnings per share 5 years from now. And then what I would do is I would assign a multiple to that earnings per share. So if between year 4 and 5 in my model, earnings per share is growing at 20%, I'll put it on a 20 times price target, 20 times EPS in 5 years. That's my target price in the stock. Why 20 times? Well, that assumes the stock is growing at 20% earnings per share between year 4 and 5. If between year 4 and 5 in my financial model, earnings per share is only growing at 10%, then my price target 5 years from now will be 10 times that earnings per share. So the second a company reports earnings, what happens is this. Analysts will quickly update their financial statements, especially the income statement and deferred revenue and the balance sheet, liability section. Okay, and they'll look at the non-GAAP numbers, okay, in the press release, okay, because non-GAAP ignores crap that is not cash-based, like depreciation, okay, and that way you've got a pretty good proxy for cash here. So the second the press release comes out at, say, 4:01 p.m. New York time for a company reports earnings, and companies report earnings, we know, 4 times per year, I'll quickly update my financial model. If the numbers were better than I expected, that might push my earnings per share estimate up, okay, 5 years from now, which might push up my target price, okay? If it doesn't push up my target price, and if the stock is already at my target price, yeah, I sell, I move on. Yeah, and the important thing about doing investment write-ups on companies is, let's say you do an investment write-up on a company, and you've got the one-pager written up, okay, with your target price on the top, fundamentals, valuation, technical analysis on that one-pager. And you buy the stock, and you love it. It's a full position. And a year from now, a news item hits the tape that makes you want to freak out and sell that stock. What I want you to do is I want you to get that piece of paper when you wrote the investment thesis a year before and look at it and tell yourself this. Okay, let me be unemotional. The stock is down a lot because of this news release I read about. If I had known about that news release when I created this one-pager a year ago, would I have still bought the stock? If the answer is yes, and the stock's down, buy more. If the answer is no, be unemotional, sell it. The most successful people in business and finance are incredibly unemotional. And for a startup, and your startup, which is doing incredibly well, I'm so happy for you, Michelle, but don't celebrate success. I'm not saying be a downer. You know how positive I am. But if you celebrate success and over-celebrate success, then when things don't go well, you're going to freak out. Stay unemotional. And I worked for billionaires. I remember I worked at one hedge fund where one of our top portfolio companies got acquired. And I was doing the math on how much money I was going to make. And we were all like high-fiving and was so happy. And the billionaire founder of the company was just unemotional. Yeah, unemotional. Didn't freak out. You have to be the same way. Yeah. All right. Manas wrote, BYD versus Tesla 50 years from now. Yeah, BYD. And the reason I say that, and for many of you out there, you haven't seen a BYD car before, especially those in the United States. They're just, the import taxes are like 100% or something. Some of them are coming through Mexico lately, but BYDs are better than Teslas and half the price. Yeah. It's an incredible, incredible company. And for those of you watching from Europe, I'm sure you've seen tons of them on the streets. Yeah. Okay. Manas wrote, what is the point of forecasting the balance sheet as most items are out of our control and useless without the income statement? Yeah, that's a great question. Spend most of your time forecasting the income statement, okay? But you got to analyze certain things on the balance sheet, like deferred revenue. Very important, because deferred revenue means revenue that the company is going to make next quarter, yeah, or within the next 12 months. You also have to analyze other things like their cash balance, right? Do they have enough cash to be able to pay their debts? Then you got to analyze the footnotes to see how much cash is coming due for their debts in the next 5 years. They have to disclose that stuff. It's important. You also want to analyze accounts receivable. If accounts receivable are spiking too much, then it means they're financing customers whenever they sell a product. And that could lead to a cash crunch. And I talked about that earlier today with DSO, meaning days sales outstanding. Yeah. Okay. But if I give you the income statement and the balance sheet, you can automatically create the cash flow statement. Yeah. Okay. And if you want more details on that, please go to FA11 through FA17. That's Finance and Accounting Semester 1 Class 1 through Finance and Accounting Semester 1 Class 7. Thanks. Or ask me today at 10 a.m., meaning in 45 minutes, on our weekly 3-hour, 20-minute call. Okay. Manas wrote DeepSeek, which is the Chinese version, I guess, of their AI product. And by the way, if you go to deepseek.com and you ask what happened on 9/11, it'll tell you tons of stuff. But if you say, tell me about the Tiananmen Square uprising in 1989, it won't answer that. Yeah. I believe in freedom of speech. So you wrote here, DeepSeek trained its entire model under a million founder is sharp as heck. Former Quant manager made billions and left is, yeah, I don't understand the question. I'm so sorry. If you just retype it in the form of a question, please, if you can. Thank you. Okay. If you had $100 now, how would you make it part of your portfolio? Bonds, stock, cryptos, commodity, gold, real estate. Please be as deep as possible. Thank you. Yeah. So what I would do is I would not allow any one asset class to be more than 5%. I would have this maxed out at 5%. I would have cryptos maxed out at 5% as well, but all crypto investments, okay? All crypto investments, no more than 5% of the portfolio. In terms of bonds, a very tiny part because I'm still young and I have another 100 years to live. And then the remainder would be stocks that I think are 5x5s based on my research. Yeah, 500% return within 5 years. Yeah, real estate, I hold it completely separate. I invest a lot in real estate, I own a bunch of houses, etc. Yeah. All right, Sean. Sean wrote, if I am a fickle whale trader and my order is significant percentage of the trading volume, shouldn't everything I do be market manipulation? Who decides the responsibility of the brokerage firm? Yeah. Yeah. So, yeah, anytime you move a stock, like really move it, even if it's a liquid, there's a gray area there where the Securities and Exchange Commission can come after you, right? So I'll give you a crazy example. Let's say that a stock trades 17 shares per day and it's at $1 and you own a lot of it. And you put in a market order to buy it whatever you can buy it at, and you push the stock up to $10 in like a nanosecond. That's manipulation. It's against the law. Yeah. Just be really, really careful with that. And what happened in January 2021, and I talk about this a lot in my latest book that McGraw-Hill just published. Shameless plug. I'm so sorry. But what happened in 2021 in January was the price of GameStop went up 29.4 times. And there's a lot of manipulation that occurred. And I say this with love in my heart to everybody out there that's a retail investor. I think the market gets a hall pass on what happened there. But I think if it happens again, these meme stocks, I think the Securities and Exchange Commission is going to start to focus on coming after retail investors. Yeah. Just be careful, please. Yeah. All right, next up. Hey, Naveed, how are you? Naveed wrote, I have a question. I hope you may help me make a decision. Sure, I'll do my best. Yeah. What are ETNs, Bitcoin and Ethereum? UK is going to launch and allow retail investors to invest in them within a tax wrapper account called the ISA. If that could be a wise investment for a long-term focus. Yeah, so what I recommend doing, so everybody in this call, I say this with love in my heart, please make sure you have an accountant. Okay, don't do your own taxes. I promise you, if you have an accountant, the probability of you getting money back and paying less in taxes goes up. Now, with respect to this question, I'm not well equipped to answer that. I don't know anything about what an ISA is. I'm so sorry, but ask your accountant, please. Yeah, yeah. And for those of you that have saved up a lot of money, I recommend also hiring a tax lawyer, especially if you have your own company. It's crazy expensive per hour. It's like $1,000 an hour. And you're like, fuck, talk faster, lawyer. But it's a worthwhile investment, yeah. Okay. Manas wrote, what do you think of the future is of Apple? It's too big to fail. No, it's not. No, it's not too big to fail. It's not a bank. Banks were too big to fail back in 2008 when we were within 24 hours, bank machines not working. Because before then, 40% of all profits in S&P 500 companies came from financial services. Yeah, Apple, it's sad, but once the stock's done fine, whatever. But once Steve Jobs passed away, God bless him, 2011, I think it was, innovation has died. What have they done? They made a bigger iPad, smaller iPad, bigger iPhone, smaller iPhone. They already had the Apple Watch. Johnny Ives, built that under Jobs, leading up to 2011. They've got a Vision Pro product that doesn't work. It's not that great. And even the newest iPhone. So the newest iPhone 17, the battery's amazing. I'll give them that. But dude, when you walk in the Apple store and you hold it, it feels cheap. And it gets dinged as well, like the back of the case, because it's aluminum and not titanium anymore. What happens is it gets dinged. It feels cheap. It looks cheap. I don't really see a need to upgrade unless you want a better battery. That's it. Yeah. But it's just another example of innovation dying when a founder leaves. Intel now has the United States government and Nvidia as partners and investors. Yeah. What is actually wrong with them, except for the fact the founder is no longer is long gone? That is exactly what's wrong. The second, Dr. Andy Grove, God bless him, he passed away a couple of years ago, stepped away from the company, became a loser investment. It just didn't work out. Whenever founders leave a company, I just don't touch them. It's just me. If anything, I look to short them. Yeah. Okay. After you do your research, please. Okay. But I think one of the reasons that the United States government is investing in Intel is because it's of massive strategic importance. And whenever I invest in a stock or a sector, I always ask myself this question. In 5 years, will this company and the sector it's in be more relevant or less relevant? Much more relevant. And that stops you from buying value traps, meaning stocks that are cheap for a reason. It stops you from getting seduced into buying cheap stocks. Yeah. And if it were up to me, I would actually make it so that all semiconductor companies in the United States for the next 10 years don't pay a penny in tax. That's how important I think this sector is. Okay. Next question is, now that the government is shut down, what does this mean? And why does this same act played every quarter over and over again? It's not every quarter. It happens every couple of years or so. It means nothing. It just means Party A is negotiating with Party B. It's taking them longer to negotiate. They will get a deal done. It'll be a non-event. Don't listen to the media and don't freak out because the DMV is closed on a certain day because of this. Yeah. Okay. All right. A congressman said the U.S. will be paying $1 trillion every year for debt interest payments. Logically speaking, how much and how long will this survive? I mean, forever. Yeah. I don't expect the national debt to increase materially from where it is right now. It's already pretty bloody high. But the United States was set up as the lender of last resorts. Yeah. So every country owns the United States bonds. Right? It's a brilliant system if you're the United States government, that is, right? And if China, for example, owns, I think, around $700 billion U.S. debt, if they were to dump U.S. debt in the open market, which they did along with Japan back in late April, but if they were to do that, it would hurt them more than it hurt the United States. China is more dependent on the United States than vice versa, right? So if the United States economy, fell into a Great Depression, right, it would kill Chinese exports to the United States. It would hurt them more than it would hurt us. Yeah. Okay. Phil, hey Phil, how are you? It's been a while. Phil Germany, who's my student that wrote the first book using my book template as well. It was called Super Students. It was about chess. You released it in 18 or 19, I think. And for those of you who want to write a book, it's really, really easy to do. I'm going to show you how to get the template, and I'll drop this in the chat as well. Okay. So you're going to go to harounmba.com/write-book right here. Okay. And again, I'll copy this in the chat. I don't ask for your email or nothing. My mom's listening. She's saying, Christopher, anything. There's one page of instructions to publish it on Kindle. That's KDP, CreateSpace for paper. They backed ACX for Audible. All you do is fill in this template and then right-click and repaginate. And if any of you think that's too much work to write a book, I want you to answer. I want you to tell yourself, how badly do you want that job, or how badly do you want to get into that university, or how badly do you want that client? You can always give your clients the book if you want to. And the template is so simple. So all I do, it looks like this, right? And for all my courses, what I do is I take the closed captions and then I just export them in text format, and it makes a book. And I learned that from Gary Vaynerchuk. You always want to repurpose. Yeah. All right. So Phil G wrote, I just wrote and finished 2 more books. Nicely done. Should I get a traditional publisher? If yes, how should I approach them? Thanks. Yeah. I believe in self-publishing because you own the content. So with my book, it's in my office here somewhere, called 101 Crucial Lessons They Don't Teach You in Business School. You know, when that came out, Forbes wrote an article on it saying it's one of 6 books all entrepreneurs need to read right now, along with Stephen Covey's books, you know, Simon Sinek and a bunch of others. In The Lean Startup by Eric Ries, I think, etc. And then Obama's publisher called me immediately. And we did a couple of calls together, and I refused to let them publish my book. And the reason is they would own the IP. So I don't want anybody to own my IP. I did it for the first and last time with McGraw-Hill. This book here you can buy online, but I really wish they marketed it more. You know, I kind of felt used by it, but I think it's a great book, nevertheless. Yeah, but anyway. Yeah. All right. I understand your rule of 5%, as most hedge funds use a similar rule. But what if I like 10 stocks, 10% each? Yeah. So what I would do in that case is I'd probably get 10 stocks at 5% each, not 10% each, and the rest of it ETFs. Yeah. And make sure you guys, when you guys invest in stocks, make sure that you're cognizant of risk management when it comes to sector exposure as well. Like, I don't want more than 20% of your portfolio to be in any one sector, like tech, retail, you know, cyclical stocks, healthcare, financial services, etc. And also be careful if you live overseas not to have too much dependence on the U.S. dollar. Yeah. All right. What is your opinion on buying a small business using seller finance strategies? Yeah, do not buy the small business if there's debt involved, okay? Never use debt. Banks are chicken. I always recommend getting equity investors that have minority position in your company. But what I recommend doing actually is, before you buy the company, if it's a private company, which I'm assuming it is, I want you to go to the Venture Capital Bootcamp in my program and write a full business plan. It'll take you several weeks, but I really want you to write a full business plan focused especially on the financials. Yeah. And for anybody who wants to start a company, like, just be really careful, man, because a lot of people do it because they go with their gut and they're like, qualitatively speaking, I could sell this product or service. Great. But you really got to focus on the financial statements, because without a financial model, without numbers, you have a thesis and not a you have an opinion and not a well thought out thesis. Yeah. Okay. All right. Tommy wrote, how do you advise one to become an investor? Yeah. If you want, what you can do, I teach all types of investing, different asset classes. You can always sign up for my program. Just go to harounmba.com and click the button at the bottom and set up a call with somebody on my team to see if it's the right fit for you. Or what you guys can do is go to the description of this webcast and click on the link and set up a call with somebody on my team to see if it's the right fit for you. You will get a massive return on investment or your money back. Yeah. And I don't accept everybody. There's a certain limit in terms of how many people I can consult with. But yeah. Okay. And for those of you in my program where you get daily calls with me, you'll notice that the jerk factor is very low. And that's done on purpose. Yeah. All right. Okay, and then Phil wrote, I couldn't make your live event this past weekend. All good, man. I'd love to meet you in person. Yeah. You wrote, I really wanted to be there. I know you just had one, but are you planning on having another one next year? Yeah, for all my premium clients. Yeah. So the one next year is going to be for my clients in the following programs. Executive Accelerator Diamond. And if you want to join one of those programs, please, again, go to the link in the description of this video. Thanks. Yeah, and then Manas wrote, how do I have a better work-life balance? So it all comes down to filling out this one page the night before, which I mentioned earlier. Thank you. Okay. Sanjay wrote, hey, Chris, where can I watch the in-person event? Yeah. So what you can do is send an email to support@harounventures.com, and somebody in my staff will send you the link. Thank you. Oh, you wrote, also, if you don't mind, what's up with the cap? Yeah. So this is an homage to my Blue Jays. So the Toronto Blue Jays, we won the American League East, and then this Saturday is Game 1. It's pretty cool cap, pretty cool hat. All right. And I also didn't feel like showering this morning. All right, here we go. My hair is messy. I did not shower this morning. I shower every day, but I didn't this morning. There you go. That's another reason too. All right. Manas wrote, will Google and Microsoft ever be disrupted? Of course. I think what's going to happen is the Department of Justice is going to cause them to break up eventually. Yeah, at some point. Although for national security reasons, it's helpful to have big dominant tech companies. Yeah. All right. Manas wrote, Oracle might own TikTok. Good news or bad news? Also, Oracle hasn't made any innovation in years except for acquisitions. Your thoughts? Yeah. So Oracle hired a brilliant executive named Safra Katz, and she is a financial wizard. Larry is still very much involved with the company, as chairman. She's CEO, but she's brilliant, and she pioneered the whole, acquiring the entire industry strategy. And so what Safra did, the big notable acquisition was back in 2003. She announced a hostile takeover of PeopleSoft. And then what happened was the year-over-year comparisons got tough once the deal went through in 2004. And so they ended up buying a massive company every single year. They bought Hyperion, ticker HYSL. They bought NetSuite, letter N, one of my favorite companies. Broke my heart when they bought it. They bought Sun Microsystems. They outbid IBM for that. Yes, they've done just a ton of acquisitions. But Larry Ellison, the brilliant founder who was the richest man in the world temporarily for a week or so, a couple weeks ago when Oracle stock went up 30%. Yeah. And Oracle, it's an AI investment, right? Now, I've been saying this for a while because what is at the epicenter of AI? Well, it's data, and large language models are populated by databases sometimes. So read between the lines. What is Oracle? It's kind of an AI company. Yeah. All right. In terms of Oracle owning TikTok, so I'm going to say something controversial, but it's important. I think that America is at odds, and opinions are so extreme in the United States now, more than at any point in history, because of social media, and a lot of it is due to TikTok. And if you read the comments on anything political statement or rich people videos, etc., it's terrifying. And my humble opinion is that America's enemies, Russia and other countries, they create bots, and these bots create comments on TikTok that make Americans that are Democrat become more Democrat, and Americans that are Republicans become more Republican. And so I think that Larry owning TikTok might be a good thing. Yeah. I don't want TikTok to be in the hands of a foreign government. Yeah. And it disgusts me, a lot of the comments too. It really does. You know, this guy, Charlie Kirk, you know, he has a wife and 2 kids. This is a human being that died. And the comments made me sick. And I don't care if you're Democrat or Republican, murder is wrong. Yeah. But I blame TikTok and social media for the state of the country today. And I think I believe in freedom of speech. I do. But I think there has to be a minor amendment to the First Amendment, which is freedom of speech, to the extent that freedom of speech should be allowed, but not if it involves anything leading to harm. And I know it's a gray area, but there should not be freedom of speech if it's about killing. Wouldn't you agree? Yeah. Okay. Question about SEP IRA. Not very familiar with that, but I'll talk about a Roth IRA really quickly if you want me to. So when you save money in your retirement fund, it's called a 401k for the most part. And what that means is you can put more than $20,000 a year, let it grow tax-free, and then it's a big number. Many years from now, you take the money out when you're older, and then you pay tax, right? It's worthwhile. And I want everybody on this call to have money taken out of your paycheck if you can every 2 weeks and put directly into your retirement savings program. Out of sight is out of mind. And as I mentioned earlier in this webcast, you want to spend what is left after saving. It says saving what is left after spending. Now, a Roth IRA is a little bit different. Instead of putting over 20 grand a year, you can put just over 6 grand per year into it if you want. But the way it works is you pay taxes first, right? And then it grows tax-free and you take the money out and you don't pay taxes. It's not for everybody, but I'll give you an example, controversial one, of Peter Thiel. Brilliant man. So what he did was he took his investment in Palantir and I think Facebook as well. And you can do this if you don't control a company. He was just an investor in Facebook as well as Palantir, which I also invested in actually when they were private. But what Peter Thiel did was he took his investment in Facebook and Palantir at, 0.00001 cent per share. And he put that into his $6,000 IRA 1 year, right? He paid taxes first. And now that's worth probably over $20 billion. Yeah. Time value of money. And good investment and good stock picking, of course. Okay. Next question is, what's your selling strategy? Yeah. So I sell stocks once they reach my target price. That's it. Or if something dramatically changes in the underlying investment thesis. That's all. And sometimes if a stock has an RSI way over 80 and it's grown to more than 5% of my book, I'll take some profits. Yeah. All right. Next question is, how do you protect personal assets from potentially being sued? Yeah. So what you want to do is, okay, couple things. If you run a company, make sure it's not under your name. Set up an LLC, limited liability corporation. If it's other stuff, there might be insurance products you can buy. So what I would do is the following. Step 1, go to LegalZoom.com and set up a call with a lawyer to register your company name, if you have a company that is. Step 2, I would go to Geico's website or State Farm, whatever, and talk to an insurance salesperson, and then try to buy an insurance product that's going to protect your assets, your house, and everything. And what you want to do is you want to buy all your insurance products, like auto insurance, life insurance, health insurance, etc., from one provider if you can, because that way they give you better pricing. Yeah. And if that wasn't the question you're asking, let me know, please. Thanks. All right, and I have to wrap up this call really soon, guys. All right, Manas wrote, will Palantir become the surveillance system for America and world? A ton of government use them. Also, now they have more mode power in politics. Mode power? Yeah, but please, reframe the question, please, if you can. Thank you. Yeah. Okay. What is the best place / asset to collect and keep cash for buying stocks fastest? I would say probably short-term treasuries if you want to be liquid. Or what you can do is you buy AAA rated bonds that are liquid as well. Yeah. Yeah. And what big companies do, you'll notice big companies on their balance sheet, they list cash and cash equivalents. And the reason they have cash and cash equivalents is cash sits in a bank account, not making very much money. Cash equivalents means short-term investments in stuff like commercial paper, which has slightly higher yields. And that's how Goldman Sachs got started many, many years ago, was they kind of pioneered the CP commercial paper market. Yeah. Investing at Fidelity is better to choose VOO or FXAIX, which is the equivalent of VOO. And then you list a couple of others. Yeah. So the way to understand which ones to invest in are: step one, make sure they're a reputable company, like a Vanguard, Fidelity, etc. Step two, make sure that they're liquid. Okay. And step three, whatever one has the lowest fees. Yeah. All right. Terror Bear, first time I see you on the call. Hope you joined again. Wrote, "Hi, Chris. Hope you're doing well. Likewise. Though you sound a bit under the weather." I am. Thanks. Yeah. Yeah. So I burned out. I worked insanely hard over the past 2 weeks for an event we had this past weekend. So I know I sound tired. It's because I am. Yeah. But I'm good. It'll take me a couple of days just to recoup, to be intellectually honest. Yeah. And even my Oura ring, I looked at it and it said there's something wrong. It's just burned out, right? So my readiness score today, my recovery index is very low. I don't know if you can even see that, right there. Recovery index, very, very low. So it's suggesting that I rest. My heart's fine, everything. And then this tracks my sleep. My sleep was good last night as well. You can also track sleep, 7.5 hours and all that stuff. And then what I also do with this, I recommend you guys get this if you want to, is my cardiovascular age. My heart is 7 years younger than me. It was 7.5. I don't know if you can see that. 7.5 years last week. So I've been pushing myself a little bit too hard without exercising, etc. Just because I had this massive deadline, but no excuse. I feel like a hypocrite because I didn't schedule my days accordingly. Yeah. So when one teaches, two learn. Okay. So Terror Bear wrote, "I've been working through your 100 steps guide at my own pace, and it's been very helpful." Excellent. Excellent. I love it. Yeah. Complete those templates first before investing. And it's what I'm trying to do is I'm trying to provide you all with a safety net to make sure you do your research so that you're a long-term investor and you pick the right assets. Yeah. And I have the same process with real estate, with tons of other products as well. Yeah. Then you wrote, "I'm very much focused on breaking into the sustainability industry soon." Awesome. And if you want to join our program, I can help you get that job. Just go to the description of this YouTube video and book a call with somebody on my team. Thanks. Okay. And whenever I feel like I'm getting sick, what I do, and do your own research, please, I always take colloidal silver. Okay. And it basically what you do is, and it's alternative medicine. You take this and you put it under your tongue for 10 seconds. And in almost every situation where I felt like I'm getting sick and I do this, it's helped me to not get sick. Yeah. So. Okay. Manas wrote, "Where do we see Russia-Ukraine crisis? Putin is stronger than ever with China and India buying record oil. Where's the deadlock going?" Yeah. So I see that. Yeah, India's amount of trade they've done with Russia is up several 100% over the past couple of years. Kind of wish nobody would buy oil from them. I despise communism. It's filth. But Russia has limited budget. Putin acts like they're a massive country, but they're irrelevant. It's a tiny percentage of global GDP. And I think eventually it'll bankrupt them. I hope. Yeah. Yeah. All right. Xiaoming, who's one of my accelerator students, good, and it was great to meet you this past weekend too at our event. Yeah. So he wrote, when doing financial analysis in the 100 steps, what's the single step that beginners usually underestimate, and how can we avoid that mistake? The most important thing about investing in any company is always the management team. Because what is a company? It's the quality of the management, right? And they don't teach that in business school. That's why we always start with the management team here. Yeah, always. Yeah. Most people, they think when you analyze a company, you just create a financial model and try to figure out barriers to entry and a target price 5 or 10 years from now. But what is a company? It's a good management team, always. Yeah, and it's interesting because in the venture capital sector where I worked for years, what we do is what we always say is that I'd rather invest in an A management team with a B business model instead of a B management team with an A business model. Yeah, the jockey is always more important than the horsey. Yeah. Okay, let me get a little bit of water here. And I booked 6 months ago. I booked a meeting with specialists at Stanford University. What I'm trying to do is I'm trying to slow down or reverse aging, and when people get older, their voice changes a little bit. And I've tried using Clear Voice, this product here. But when I look at some of my older videos from many years ago, I sounded a little bit younger. And so what I'm doing is I'm going to Stanford, and then they're going to teach me how to do voice-based exercises and other stuff so that when I age, which I am, the second you're born, you're slowly dying every day. But I want to make my voice sound a bit younger. Yeah. And the reason people ask me why I use a straw with my coffee is just so my teeth don't get brown. Yeah. Okay. Xiaoming wrote, what is the best way to tell if a trend is secular or cyclical, especially when technology evolves so fast? Yeah, sure. So let me answer that in reverse order. So cyclical means a company does well based on the economic cycle, right? So if we're in cyclical growth mode and GDP is growing, most companies benefit. If we're in decline mode, right, and we're at the bottom of the economic cycle, which can be 5 to 10 years, like the entire cycle, then that's usually, not a good time to invest in certain companies. Secular is different from cyclical. Secular means a new growth market, brand new, right? So the secular growth market everyone's talking about now is AI. It's secular growth. Yeah. And eventually, every secular growth market becomes cyclical, right? So AI is secular growth, right? It's going to grow no matter what the economy is doing. But as AI matures and AI companies mature within a couple decades, they're going to become cyclical companies, meaning they won't do as well when the economy is not doing well, and vice versa. It's kind of like growth versus value. All growth stocks eventually become a value stock because of the law of large numbers. Yeah. Kind of like the United States economy. The United States economy is not a growth economy because it's so darn big. It's the biggest economy on the planet. So therefore, it'll never grow more than, a couple percent per year. And as a result, it is very much a cyclical-based economy. Yeah. As most economies are. When it comes to insider information and ethics, meaning one of the classes in my program, beyond just avoiding trades, how can we build a personal reputation for integrity in finance so others trust us with big responsibilities? Yeah. Yeah. If you ever, okay, so the litmus test is this. If you hear something about a company that the company has not disclosed publicly on a webcast, the entire world, you cannot trade on that. That's insider information. If you're not sure, don't trade. If you hear something that you think is insider information and you work at a company that invests in stocks, you do what I do, which I've done many times. You go directly to the head of compliance and say, this stock should go on the restricted list because I think I may, not sure, have heard something. Yeah, very important. Yeah. And for those of you who work at publicly traded companies, I don't know, say you work at Intel, you can't disclose any corporate secrets or anything to a friend or anybody to let them know how the quarter is progressing. You go to jail for that. Just be careful. Yeah. Okay. And I've had friends that have gone to jail for that as well. Not while I worked with them, but of course I went to visit them in jail many times. Yeah, just be careful. Yeah. You know, it takes, I don't know, like 30 years to build a reputation of yourself and 3 seconds to ruin it. Just be careful. Yeah. Just follow those 10 rules that we should all follow in life. Yeah. Okay, the UK introduced digital verification. Are we moving into a government-controlled environment where people are controlled by the government? Yeah. Yeah, I saw the same news release that you saw, and it really concerns me. It concerns me. The extreme example of that is China, though, where the government tracks everything. I think it's 500 million faces are now recognized by cameras. Yeah, yeah, it's terrible. But they've noticed some positive things. Just to be intellectually honest, like kidnappings have gone down materially and all that stuff. Yeah, yeah. I'm more of a libertarian, though. Yeah, I believe in tiny government and power of the individual. Yeah. All right. All right, MBO wrote, "Hi, Chris. I'm a big fan of Ken Griffin. So am I. I worked at Citadel, and I remember one time I spent a half an hour with him one-on-one in his office, and dude, this guy's a renaissance man. He's brilliant." Yeah. You wrote, "Can you tell me something about him and how he achieved this level?" Yeah, he's very, very passionate about investing, but he's brilliant, right? And people don't understand his genius to the extent that, you know, when I worked there, you know, a lot of the code that ran the back office, you know, trades and all that stuff was actually written by him. He's just a genius. I think he went to Harvard with a good friend of mine, and he graduated in 3 years. And my friend said that, and they were in the same dorm together, and he said that he had a satellite dish outside his dorm room. I think it was in 1987 or something, to get live data feeds. And I think that was around the time the market, you know, crashed. He might have shorted the market in October when the market crashed in 87. And then at his dorm room, there was always tons of FedEx envelopes. They were stacked, leaning against his door when he wasn't there. I guess those are annual reports from companies, etc. Just a brilliant man. Yeah. But I think that one of the reasons, it's not just brilliance, but it's also passion. He's so passionate about stocks and investing. And if you follow your heart, meaning what you're most passionate about, you'll be extremely successful no matter what. Yeah. And he takes calculated risks too. Yeah. All right. Manas wrote, "Thank you for everything, my mentor. God bless you and your family forever and ever. See you in the house of Habibi in a few minutes." That's right. My weekly call. Yeah. Excellent. I will wrap up this call in a minute. Sanjay wrote, "Chris, what do you mean when you say people who use dollars outside should be careful?" Yeah, when I answer that question, what I was saying was if you don't live in the United States, just be careful you don't have too much exposure to the U.S. dollar, right? So if you live in a country where your currency is pegged to the U.S. dollar, it's kind of a moot point. But if you live in a country where, most countries, where the FX rate, foreign exchange rate, changes all the time, you just want to be careful you don't have all of your eggs in one basket. Yeah, I hope that makes sense. Okay. Sanjay wrote, "What is the possibility of World War III in 5 years?" Close to zero. Yeah, I don't think it would happen. Yeah, and the reason is because people are smart to the extent that we don't want mutual destruction. It's kind of like during the Cold War. You know, I grew up, I was born in 72, and I grew up during the Cold War, and, you know, we were always worried that, you know, Russia would launch their nukes and vice versa, but we're all smart enough to know it's mutual destruction. Yeah, and I'm more of an optimist, yeah. Yeah. And don't, Alexa, stop. Don't listen to any social media person that puts fear in your head. Yeah. Things are good and they'll get better. Okay. Okay, great. All right, guys, I am going to wrap up this call. Please, if you can, if you're interested in joining one of my programs, just go to harounmba.com, okay, or harounventures.com. It's the same URL. And you probably can't see this, but down at the bottom it says book a meeting. And then click that blue button at the bottom of the screen that says book a meeting. If you want to chat about joining my program, please. Yeah. And for everybody else that's already in my programs, I will see you in a couple of minutes for a 3-hour and 20-minute webcast. I have premium products where you get 10 hours of one-on-ones with me over the course of a year. You also get 7 hours of weekly access to me in small group Zoom meetings every single weekday. And that's over 300 hours per year and much, much more. And networking opportunities, events, etc. If you're interested in this, just go to the link in the description of this video to set up a call with somebody on my team to learn to see if it's a good fit for you. Now, I'm going to end this webcast like I always do with a very short video. It's an interview with Steve Jobs that I licensed from the Silicon Valley Historical Association, which is life-changing. For those of my premium products, I'll see you in a couple of minutes. Thank you and God bless.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it. That's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.